Hey guys, it is Sunday, December 19th, and this is episode 42 of Odds Are, your S&P 500 weekly market forecast. All right, let's take a look at last week. So at the risk of sounding like a child, I will say, I told you so. So we said last week that there was a pretty good chance that we were not going to have a breach of the breach points. Now remember, typically it's almost about an 82% chance that we do have a breach of the breach points on any given week. But looking at this setup where the breach points were so spread out and out there near the actual settlement range limits, I said that this looked like a perfect setup for us to not have a breach of the breach points. And we didn't. So the other thing that came true was we said that we were looking to see if the red midline was going to act as support. And now it did, have that magnet effect coming back towards that red midline of the Bollinger Band, but we only had a slight breach of it, at the end of the week. We did poke down below throughout the week, but we closed a little bit below it, and it looks like it's still holding. I wouldn't say we've actually breached back to the downside, but it's looking like it wants to. Other than that, we didn't come close to the parabolic SAR, which was down at 43.61, and we did, of course, close within the expected settlement range. Also take a note that the Bollinger Band, the blue shaded area range, really hasn't changed much. It's kind of just like flat because the market has had enough volatility to keep it wide, but has stopped moving in such a manner that it's no longer expanding. Now it's just kind of waiting for the next move. All right, so let's take a look at what's going on with the moving averages. Everything's still neutral on the short term, and medium term is bullish, long term is bullish. So neutral in the short term because we went from being below that red midline all the way up to above and then back towards it. So not really one direction or the other. Again, this market could break back up to the upside or come tumbling down. That red midline is trying to act as support, but we'll see what happens here in the weeks to come. All right, and let's take a look at the forecast for this week. Now, interesting here, the chart that we have been using for the relative view is going to show a price closer to the 4736 range, but that's because we're right in the transition where the December futures contract is coming up on expiration. And so when I'm looking at the price action, I'm looking at what is the contract that has the most volume, and that's actually the March contract. Now the volume has actually shifted, so the settlement for that contract, which has the most volume, is actually 4710. So that's what you see here. But 4710 was the settlement, and look at this setup. So two things to note here. One, you have a 99.98% chance of a breach, and we all know that's because last week we did not have a breach. But also take a look at the position of the breach points. The upper breach point is above or outside of the expected settlement range, so above that 47.01, and the 45.56 is well within. So looking at these two, I'm saying that the logical call would be that we're going to breach to 45.56, and that's because one, you have that that magnet effect that on that midline. We've got that downward pressure. Unless it has a nice strong bounce upward, I don't think we're going to hit that 47.18. I think we're looking at 45.56. That's just my my thoughts on that. It very well could, but then in order to close within the expected settlement range, it would have to come back down and close below 47.01. So path of least resistance is going to be 45.56 breach, and then staying above 44.93 to close the week. All right, and then 43.89 is your new parabolic SAR level. Still, about 100 points below the lower end that we're expecting to settle within. So don't think that's going to be happening this week. All right, let's put this together in the relative view for next week. And so you can see again here that interesting location of the breach points where the upper one is outside of the range. And honestly, I said, right now we're straddling that midline. It could try to bounce back up, but it looks like it wants to go back down into that channel below the midline and above the blue Bollinger Band, which, interestingly enough, also coincides with a possible breach of that 45.56, which is still inside the Bollinger Band range, right? So that red line still being the red lower breach point still within the blue shaded area, and then you see that the 44.93 is outside of it. So all those things working together can easily lead us to go down, breach 45.56, and then stay within that blue shaded area, which is above 44.93. Just saying, people. The odds are in favor of that. Doesn't mean it's going to happen exactly that way, but that's what I'm looking at, how it's shaping up for this week. All right, if you didn't see that one coming, I don't know how many times I can tell you guys this. I really hope that people are taking advantage of these calls. We talked about the fact that we weren't going to have a breach, or at least I didn't think we were going to have a breach based on the setup, and we didn't. We did close within the expected settlement range. And now we're set up again for another 99.98% chance of a breach. So this is definitely a call that you can take up on. Might be a good idea to get yourself a put on that lower breach point, which is at 45.56. But holiday trading can be tricky. A lot, volume isn't what it normally is, and market can really move against you here. So do so at your own caution, but that's something that looks pretty intriguing to me. All right, and then we'll wrap up with the quote of the week. Now, this one is by the author of The Essence of Trading Psychology in One Skill. And I'm going to try my best to pronounce this, but it's Ivan Biagi. Sorry if I mispronounced that. But either way, this quote is pretty cool. Trading doesn't just reveal your character. It also builds it if you stay in the game long enough. And so we'll break this down into two pieces, right? So first, how does trading actually reveal your character? Well, if you've never actually put money on the line, you don't know how you're going to respond when the rubber really hits the road, when the market's live, when you're experiencing gains and losses and the euphoria and the misery and the roller coaster ride. It really does test you, put you to your limits. I've had days where I felt like I was ready to take over the world, and I've had days where I really wanted to just go into a room and puke. I'll tell you, it can be pretty wild. But it also builds your character, because eventually you're gonna have all those experiences under your belt, and you're gonna realize that you've suffered through some difficult times and you've experienced some high times, and at the end of the day, you're still here and you're still trying to make progress. And so just having that experience and knowing that you can overcome that and building that discipline and being able to draw from those learning experiences, it just makes you better overall. Honestly, even if you were to give up on trading, even if you had a bad experience, you blew up your account, and then you found out this wasn't for you, you would still walk away with some knowledge about yourself, which to me is more than worth it. So I encourage you guys, if you are doing any type of trading, please, journal your emotions, journal how you're feeling, see and track your personal growth, because it's not just about growing your account, it's about growing as a person as well. So I will leave you guys with this. This will be the episode before Christmas, so I wish you guys all a Merry Christmas, Happy Holidays, whatever it is that you celebrate. We will still have an episode next Sunday between Christmas and New Year's, so we will see you guys then. Take care.